cash or rental property. Part 2. Looking at the numbers. In the first video, we talked about fear, clarity, and decision-making. Now, it's time to go one step deeper. Not with complex math, but with realistic numbers beginners actually face in the United States. Because numbers don't remove fear. Understanding them does. What cash really does in the U.S. For most beginners, cash means high-yield savings accounts or money market funds. In recent years, these have paid roughly 4 to 5% per year. That sounds decent. And for short periods, it is. But after taxes and inflation, the real return is often closer to 1 to 2%, sometimes less. This means cash is excellent for safety and flexibility, but weak for long-term growth. Cash protects purchasing power. It rarely multiplies it. What rental properties realistically return? Rental properties are often misunderstood. Beginners hear stories about passive income. The reality is more grounded. In many U.S. markets, rental properties generate 5 to 8% annual gross return from rent, before maintenance, vacancies, insurance, and taxes. After expenses, the net cash flow may be closer to 3 to 5% per year. Not impressive at first glance, but that's only part of the picture. Rental properties also offer long-term appreciation. Rent increases over time. Potential tax advantages. Real estate rarely wins fast. It wins slowly. Why comparisons go wrong? The biggest beginner mistake is comparing cash returns this year. 2 rental property returns over decades. Cash is short-term stability. Real estate is long-term structure. When beginners expect cash to grow like assets, they feel disappointed. When they expect assets to feel as safe as cash, they feel stressed. Each tool has a job. Problems start when we confuse them. A realistic beginner framework. Here is a calm way to think about it. Cash is for emergency funds, flexibility, peace of mind. Rental properties are for long-term income, inflation protection, gradual wealth building. Beginners don't need to choose one forever. They need to understand when each one makes sense. The quiet takeaway. Numbers don't point to a single answer. They point to balance. Cash alone rarely builds wealth, and the U.S. assets alone often create stress. The smartest beginner move is not boldness. It is alignment. Closing thought. Fear fades when numbers meet context. Calm decisions grow stronger over time.